Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. Let's kick off with a look at the SPAC market and examine why it's cooled off considerably over the past couple of weeks. We've seen billionaires, celebrities, and athletes race to create special purpose acquisition companies, or SPACs, over the past 6 months. These blank check firms, which raise money from investors and then go hunting for takeover targets, have been flagged as a sign of frothiness on Wall Street. New scrutiny of SPACs from regulators is forcing a cooldown. Last week was the first time all year that no new SPACs hit the market. In fact, only 6 new SPACs have been created so far in the second quarter. This time last quarter, 55 fresh SPACs had made their debut. Recent announcements from regulators have hurt sentiment. In late March, the SEC issued a statement expressing concerns over disclosures and governance related to SPACs. Earlier this month, the agency indicated it would tighten some accounting standards. The mood has been tough for shares of SPACs that have already listed. Like other risky assets, they've been hit by turmoil in the bond market where yields are rising due to inflation concerns. Even if the creation of new SPACs stays light, the hundreds already in existence will continue to have a serious impact on the market. Goldman Sachs estimates that SPACs could drive a $900 billion wave of mergers and acquisitions in the next 24 months, with $129 billion of capital currently searching for target companies to take public. And with that, let's jump into technology deals of this past week. Ride-hailing company Lyft has sold off its autonomous vehicle unit to Toyota's Woven Planet Holdings subsidiary for $550 million, the latest in a string of acquisitions spurred by the cost and lengthy timelines to commercialize autonomous vehicle technology. Under the acquisition agreement, Lyft's so-called Level 5 division will be folded into Woven Planet Holdings. Lyft will receive $550 million in cash, with $200 million paid up front. The remaining $350 million will be paid in payments over 5 years. About 300 employees from Lyft Level 5 will be integrated into Woven Planet. The Level 5 team, which in early 2020 numbered more than 400 people in the US, Munich and London, will continue to operate out of its office in Palo Alto, California. The transaction, which is expected to close in the third quarter of 2021, officially ends Lyft's nearly 4-year effort to develop its own self-driving system. This week, we have an important deal in the fixed operations area to announce, as WarCloud, the warranty processing automation SaaS provider focused on franchise automotive dealers, closed its $900,000 seed round. The round was led by Automotive Ventures, with additional participation from Driven Capital Partners and Wise F&I. For our regular viewers, you'll recognize that despite the last couple of quarters of record profits, post-COVID, dealers are likely to return to an environment of increasing profit margin compression and the need to focus efforts on finding efficiencies across all areas of their operations. WarCloud is a cloud computing technology platform that automates warranty processing for automotive dealers. By outsourcing back-office functions, dealers enhance profitability, streamline processes, and improve focus on the customer experience. WarCloud's mission is to drive increased profitability for the dealer, and they do that through tech enabling their warranty processing. Warranty is one of the few remaining areas of the dealership that has little to no automation, yet it is critical to protect and improve profit margins, since warranty is the fastest growing segment of a dealer's service line item, which is the dealer's primary profit generator. OEM warranty work has grown more than 38% over the last 5 years, currently generating almost $24 billion in the US. Prior to WarCloud, dealers suffered manual, time-consuming claims administration practices where costs cut deeply into service profits. WarCloud's proprietary technology platform enables dealers to speed reimbursements and avoid the risks associated with rapidly increasing warranty volumes in a time where the labor pool of qualified warranty administrators is disappearing. Autopia has raised $9 million from Hyundai Motor Company, as well as Maven and InVentures, the Israel-focused venture capital arm of Sumitomo Corporation. Existing investors Mizma Ventures and Israeli firm NextGear Ventures also participated. Autopia's first product is a universal teleoperation platform that allows a human operator to monitor and control any type of vehicle from thousands of miles away. Autopia software is combined with off-the-shelf hardware components like monitors and cameras to create a teleoperation center. The company's software also includes assistive features which provide path instructions to the AV without having to remotely control the vehicle. Since launching, the small 25-person company has racked up investors and partners such as BMW Group, Fixed Route, AV startup May Mobility, and Bestmile. Easymile, which builds shuttles for transporting both people and goods, has closed a Series B round of funding of 55 million euros or 66 million US dollars. The funding is being led by Searchlight Capital Partners, the investor that just earlier this week appointed former FCC chairman Ajit Pai as its newest partner, with McWin and NextStage also participating. Previous investors, rail industry heavyweight Alstom, BPI France, and auto giant Continental also participated. Easymile claims to be the world leader in autonomous shuttles, with 60% of the global market using its vehicles. It says that its vehicles have racked up 800,000 kilometers in over 300 locations in 30 countries. But as a mark of how small and nascent the market is today, Easymile also says that it just has 180 vehicles deployed worldwide. So on to our companies to watch. Every week we highlight interesting companies in the automotive tech space to keep an eye on. If you read my monthly Intel report, I showcase a few companies each month, and we take the opportunity here on the Friday Five to share some of those companies each week with you. Today our company watch is Friendemic, founded in 2010 and located in Salt Lake City, Utah. Friendemic specializes in online reputation tools for many of the world's largest automotive brands, retail-level dealer groups, individual dealerships, and retail businesses nationwide. Their tools have continued to evolve over the years into the launch of the Catalyst Suite, a group of online reputation products. Friendemic offers an online reviews management service with a dedicated team monitoring and responding 365 days a year. On the advertising side of the business, they provide a powerful social advertising platform called Social Drive. Friendemic has teamed up with thousands of businesses to position themselves as the leaders in online reputation and social media marketing software services. As the importance of online reviews continues to grow, Friendemic has refocused their efforts towards reputation software tools and support services. By building relationships and providing solutions for businesses, Friendemic has developed an understanding of their needs with online reputation and social media management. Their tools and software platforms have continued to evolve with their customers' needs into a well-rounded group of tech-enabled services dealers can trust to grow their brand and credibility. So that's it for your weekly Friday Five, a quick wrap-up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space with a ton of deals going on right now. Make sure you stay tuned in each week to stay up to date on the auto industry's technology M&A activity, and I'll keep my fingers on the pulse of deals being done so I can share updates each week with you. If you're an early stage automotive technology entrepreneur looking to raise money, or an entrepreneur who wants to chat about the best timing and process to sell your company to achieve the best outcome, I'd love to discuss with you. Thank you for tuning in to CBT News for this week's Friday Five, and we'll see you next week.
Thanks for joining us for another edition of the Friday Five.